Hello traders out there in Traderland, my name's Dez here at Grok Trade and this is the weekend edition. This video is good through Sunday, March 11th, 2012. And it looks like Wall Street ends the week with gains. On Friday, we were just a bit in positive territory across the board, but the thing that is noteworthy is the banks led the charge by a lot, up 1.5%. VIX down nearly 5%, down at 17, and commodities bouncing back on Friday. With this, we see that gas prices leveled off this week, and a little bit of a pullback as of Friday. Gold right now is at 17.14, and oil per barrel is 107.51 at the time of this video. Anyway, this weekend, coming up a week from this weekend video, on the 17th, 18th, and 19th, we will be doing a mentorship. It's an online mentorship. Hope you can join us. Fantastic time, growing base of students coming through, and a 100% satisfaction rate, and we give 100% money back guarantee, and out of hundreds and hundreds and hundreds of students, not one person has ever asked. Something to look into. If you want more information on that, let me know and we'll get that to you. Anyways, take a look here at the markets. We have a level that I want you to be aware of. This swing high right here puts us around 1374, 1375 area. And on Friday we saw that as being a high. If we do reverse, this would be pretty bearish. This could be the beginning of a double top trend reversal pattern after such a big run. So the level that we need to watch for is this low going into Monday and Tuesday. And if we go lower than 1365 and close there, I would expect this start to drop, and this could be a short-term high for relatively near future here. So that's something we're watching for. If the market's going to get bullish, they need to bust through this 1374, 1375 area, head north, but this area is acting as support. We broke that support. If it rallies up there and hits resistance, that is still bearish. So really, for this market to get bullish again, we need to come up, blast through this, or pull up there, pull back, and find this area right here as support. So it looks something like that. But let me show you a couple charts here that's just bearish. Big extended run to the upside. Now we have this hanging man reversal pattern, this long leg doji, but it punched down to the south, so it punched a hole. There's a leak in the ship here. If we start to drop, it could be a nasty little pullback. I could see the markets dropping around the 1320 level pretty quickly. During this week, we did pull back. We rallied back pretty solidly. However, this is a reversal pattern, especially after being so extended in the markets. And if you check this out, we do have negative ticks taking place. Last couple ticks on the weekly chart here on the MACD using 5, 9, and 2. On the monthly, we did break out of a resistance line area, which we had this big triangle. However, if we do start to go bearish, we're going to get a tweezer top on a monthly formation if we close out the week with no new highs. And that would be ominous. Tweezer patterns are quite powerful. Anytime you get those, bad things can happen if you get a tweezer top. So if I look over here at the Dow, I want to show you something. This is on the monthly chart. Big uptrend, we drop, we rally higher, 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 but this trend line coming up here is acting as perfect resistance, and you have a tweezer top and a doji at this moment. Month's just getting started, so anything can happen, but we need to bust through this and fast. Now on the weekly chart, big run, hanging man reversal pattern, in a lot of trouble. In the daily, we've broke down now from this rising wedge. Now we have a bear pullback, and you have a shooting star reversal pattern at a moving average. If we start to drop, we could get another nice leg going southbound. Now on the NASDAQ, here's the daily chart. You know, we're right here at these highs around 3,000. 3,000 is going to act as resistance. And if you look over here at the weekly chart, hanging man, you do not need a red candlestick. White candlesticks, just as much of a hanging man as the others. Be watching this area. On the monthly chart, a tweezer top, and we're at the beginnings of a hanging man reversal pattern. However, again, we're just at the very beginnings of the month, so don't put too much weight on this, at least not yet. Small caps, here is the monthly. You can see this support, now support is resistance right now on the monthly. Bad sign, we need to get through there. Now on the weekly, you can see we have resistance, we do have support. So with this, we could blast higher. So the weekly actually looks more bullish to me than bearish. And if small caps can get some legs under it, that would be a good thing. And however, on the daily chart, we broke down, we're popping back to the falling 20-day moving average. This would be a good place to see it actually roll over and give us another down leg. So you drop 5 to 6 bars, you're up, 3 bars, then you drop again. So not great. If I look here at the banks, let's go to the weekly chart on the banks. The banks, we have a high base. We are finding some support. Big pop here on the on Friday or for the week. There for the week, man, we were in some trouble, but we bounced back nicely. So if the banks can stay strong, the markets still have a chance. We need to get over this 200-week moving average, which is acting as resistance. Now, when it comes to the monthly, pretty extended here, gang, but we are above the 20-month moving average, which is pretty good. Now, as far as gold is concerned, for the month, big doji and a lot of consolidation. We've done a lot of chopping around, but it's hard for us to move out of this 160 range. If you look at a weekly chart, you had a breakout of a bull flag, but there was no follow through. It already has shown weakness. There's my phone. And then you have this hammer right here at the rising 20-day, so 20-week moving average. With this hammer, we could start to see some more upside potential on gold. And on the daily, I want to point something out to you. This is the 200-day moving average. Look how this acts as resistance here, support here, and support here. Pretty interesting. If I were to pull in just a line chart, let me show this to you. Resistance, we come across support. So be watching the 20-day moving average, the 200-day moving average. I stand corrected. As I shared with you, we do have a mentorship coming up this next weekend, and I'm going to do a little discount for you here. If you go down to premium services, click on the 2-on trading courses. Gang, these are awesome. 6 solid courses, 28 lessons within those 6 courses. It will take you over 6.5 total hours to go through this advanced trading education. You can take this course as many times as you want. It's $2,500 worth of information here, and I leave nothing out. This is great. Anyway, when you click on this to buy this course, I want you to do this. Go here to the special code, put in Grok, notice capital letters, and put in 50 and hit apply. When you do this, oops, I only want 1, not 2. What you'll see is $50 discount, puts it at $647. It is worth every penny. Anybody that does that this weekend, I'm going to do one better. I will put that towards your mentorship coming up this weekend. So you will deduct that from the mentorship fee. Take care, safe trading, share us with a friend.